Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
All right, let's dive right in. There's a major federal tax overhaul that is still sending massive shockwaves through state tax codes all across the country. And honestly, it's creating a messy, super complicated landscape for businesses, but also some pretty incredible opportunities. Today, we're going to untangle this whole complex web. So let me just ask you this. How much have you been thinking about the ripple effects of the Tax Cuts and Jobs Act? The TCJA. If you run a business, you might think it's old news. But trust me, this one piece of legislation is still dramatically reshaping the entire tax landscape. You see, the TCJA was this massive federal law, and it's basically the catalyst for all this chaos we're seeing now. It forced every single state to make a choice. Do we get in line with the new federal rules, or do we, go our own way? And that single decision is having huge consequences for businesses everywhere. So here's our game plan. First, we'll look at that ripple effect from this one federal law. Then, we're going to solve the puzzle of something called PTET. It's pretty cool. After that, we'll cover some other strange but really important updates. And finally, we'll boil it all down to the one key takeaway you absolutely need to remember. All right, let's get into our first section. The story of state taxes right now, it's really the story of the Tax Cuts and Jobs Act and how it's basically creating this massive divide straight down the middle of the country. So what exactly was it? Well, the TCJA was this sweeping overhaul of the federal tax code back in 2017. For businesses, it totally changed these key rules around things like how you can deduct the cost of new equipment, you probably know it as bonus depreciation, and how you have to account for R&D expenses. The whole goal was to simplify things on the federal level, but it ended up creating a storm of complexity for the states. And wow, this slide really just lays it all out, doesn't it? It's the Great Divide. On one side, you've got the conforming states, the ones that are aligning their rules with the TCJA. Texas is a great example. They've adopted the new federal rules for bonus depreciation. But on the other side, you have the decoupling states, and they're pushing back. California, for instance, basically said no thanks to the new R&D rules and is just sticking with the old way of doing things. Now, what's so fascinating here is the why. Why would a state conform? Well, the Texas Comptroller put it perfectly. For them, lining up with the federal law means businesses don't have to keep two completely separate sets of books, one for the IRS and a different one for the state. It's all about slashing that red tape and just making life simpler for businesses in Texas. So here's the bottom line. This is why this really matters. This split is creating an absolute mess. We now have this patchwork of 50 different tax systems that are more different from each other than ever before. So if you're running a business in both California and Texas, you suddenly have a major compliance headache. It means that where your business is physically located now has a much, much bigger impact on your taxes than it did just a few years ago.
Okay, let's move on and see how this all connects. Because in response to all of this complexity, states and business owners, well, they've gotten creative. And that brings us to the PTET puzzle, a really clever workaround that is gaining traction fast.
PTET. It stands for Pass-Through Entity Tax. And really, it's just a genius workaround to that federal rule that caps your state and local tax deductions. The SALT deduction cap. The simple version is this. Instead of the business owner paying the state income tax, the business itself pays it for them. So let's do a little play-by-play. First, the business itself chooses to pay the state income tax. And because the business pays it, it becomes a fully deductible business expense on the federal tax return. No cap, no limit. Then, to make it fair, the state gives the owner a credit for the tax the business already paid, so they don't get taxed twice on the same money. It's a really smart, totally legal way to maximize deductions. And get this isn't some static one-and-done concept. It's constantly evolving. California just extended its PTET law all the way out to 2030, showing they're really committed. Illinois is putting out new guidance for specific businesses, like investment partnerships. And Minnesota is clarifying exactly how and when owners can claim that credit. The states are actively fine-tuning the strategy as we speak.
Okay, time to shift gears a little. Beyond these big trends of the TCJA fallout and PTET workarounds, there are a handful of other really fascinating and sometimes kind of strange updates happening right now. So let's run through a few quick hits.
First up, Amnesty. Two states are basically offering taxpayers a chance to come clean. Indiana's got a program planned for 2026 that could wipe out all penalties and interest. New Hampshire's program is coming up a bit sooner, and it's a little different. They'll waive all the penalties, but only half of the interest. It's a perfect example of how even when states have a similar idea, the details can be totally different. Okay, now just look at this number, 232. Any guesses? What could that possibly be? I'll give you a hint. It has to do with something that's probably been in your pocket or your car's cup holder your entire life. Yep, that's it. The US penny has been around for 232 years, but there's always talk of phasing it out. And if that finally happens, believe it or not, it's going to create some weird tax issues. States like Iowa have already had to figure out how retailers would even handle sales tax rounding on cash transactions if you can't make exact change. A tiny little coin could cause a very real tax headache.
So after all that, federal law changes, creative state workarounds, even the potential death of the penny, what's the big picture here? Let's bring it all home with your key takeaway.
So if you only remember a few things from our talk today, make it these. First, divergence is the new normal. The states are going their own way. Ironically, a single federal law has created 50 different playbooks. Second, that means tax compliance is getting much harder, not easier. And third, because of all this, geography is destiny. Where you choose to do business has never, ever been more critical to your bottom line. And that really leaves us with one final big question to think about. As all these state tax policies drift further and further apart, creating their own unique advantages and disadvantages, are we sort of unintentionally creating 50 different little economies all inside one country? Something to chew on. Thanks for tuning in.